The Bitcoin collapse that started on the 10th of October wasn't a coincidence. It was a coordinated attack, a political attack, a coordinated financial strike on crypto timed to the minute. And the target? The target wasn't crypto. The target is Donald Trump. Well, more correctly, it's not Donald Trump. It's the financial system that Donald Trump's building. And if you think that sounds dramatic, let me show you the evidence. Timestamp to show you how the cascade of the 10th of October was priced to the minute. Timestamp to show you how multiple institutions, agencies, and even political players all moved at exactly the same time against companies like MicroStrategy and a whole lot of other companies. This move had one goal: to hit Donald Trump directly, politically, and financially. And why? Because Trump isn't just a supporter of Bitcoin anymore. He's financially tied to it. And he's using it to break the old financial system, the same system that was weaponized against him. A financial system that includes politicians, puppets, banks, and even the Fed. I'm going to show you today exactly who executed it. I'm going to show you how they timed it, and I'm going to show you exactly why they're targeting Donald Trump right now. I'm going to show you how deep this thing goes. And when I do, you're going to be amazed. Let's start with the moment that everything broke. October 10th. $20 billion liquidated, 1.6 million traders wiped out, the biggest deleveraging event in crypto history. The entire industry got hit with a sledgehammer. But when? Well, that's where this all starts. On a Friday night, when Europe was closed, Asia was offline, and the US was just closing up. That's when this attack started, when liquidity was thin. Because at the exact same time, literally the same day and time, MSCI quietly released a proposal that could delete every single crypto treasury company from global indices. And look at the timestamp. This was the real trigger. But at the time, the media didn't amplify it. I mean, I'm close to the crypto news. Did you see anything about this announcement on the 10th of October? I didn't. I follow the mainstream media. I didn't see anything. Did you? It didn't hit the mainstream media at all. But TradFi acted on it. And all this time, we've been confused as to why crypto cascaded on the 10th of October and why we got such a huge liquidation event. Well, now we know. So let's unpack the announcement for a second. MSCI is a global index company. They create indices that passive funds invest in. And if a stock is included in these indices, they're automatically bought by these passive index funds. And passive index funds are huge. And MSCI is also huge. They're not a small player. In fact, they're as big as the S&P, and they have about $18 trillion under management. Yeah, you heard correctly, $18 trillion. If MSCI includes you in the indices, passive money buys you. If MSCI excludes you, passive money must sell you. It's not a choice. It's computer algorithms. There are no negotiations. Either you're in or you're out. And on the 10th of October, they published a document that had some changes on the appropriate treatment of companies whose primary business model involves holding crypto or other digital assets. And under the new category, digital asset treasury companies, which hold more than 50% of their assets in crypto or Bitcoin, become index ineligible. Now, if that goes through, that would eliminate MicroStrategy and a whole lot of other crypto treasury companies from all indices. And that would make a lot of companies have to automatically sell the shares that they hold. But that's not the only thing. The problem is that it would also make these companies less attractive. And if these companies are less attractive, that would make it harder for them to raise money. And if it was harder for them to raise money, then they wouldn't be buying as much crypto and crypto prices wouldn't be going up so much. Now, because the treasury companies have been the biggest drivers of this cycle, if this goes through, it basically puts a big handbrake on the crypto industry. So that's the first part. And now we know exactly what started the October 10th crash. Or at least that's what I thought. Turns out though, there was another first part. And the other first part actually played out a lot earlier. Just look at this chart. On July 7th, when MicroStrategy was trading near its all-time highs, JPMorgan randomly sent out a strange email regarding a firm-wide increase in the margin requirements on MicroStrategy. And it wasn't a small increase, from 50% all the way up to 95%. This is the kind of mail that you send out when a company is on the brink of collapse or liquidation. And what it means is that effectively investors can't use MicroStrategy as collateral anymore. Anyone who bought MicroStrategy using borrowed funds, anyone using leverage, anyone who posted MicroStrategy as collateral for other transactions in their accounts suddenly no longer met the requirements. And so what did they have to do? They had to unwind their positions.
On July 7th, okay, that is when they did a firm-wide increase in the margin requirement for MSTR. People had to liquidate that security.
I know, it seems crazy. It's unprecedented. Why would they do this at the top when the price was the highest, the risk was the highest, and the volatility was the lowest? And so if you look at the MicroStrategy chart since the 7th of July, of course, ever since then, it's been trading down. The argument is that what they did is force a deleveraging and liquidations of MicroStrategy investors. And by doing that, they started pushing the MicroStrategy price down, which is weird because MicroStrategy had no model change, no volatility justification, nothing. Just a random email with a move designed to hit MicroStrategy. And if this is happening to one of the biggest Bitcoin buyers in the market, obviously the price of Bitcoin is going to follow suit, right? And that's exactly what it did. Just look at the chart. The 7th of July was the high. And ever since the 7th of July, it's basically been coming down since then. Okay, it doesn't end there though, because there's a next part to the story. At crypto's weakest point, after a series of mass liquidations, and when liquidity and sentiment was at its lowest, JPMorgan decides to amplify the narrative. What do? JPMorgan now publishes the infamous $9 billion forced selling report. And they feed this to Bloomberg's, Reuters, CNBC, and every single media outlet in the market. And in this report, what JPMorgan does is it models the worst case for MicroStrategy. $9 billion in forced sales of MicroStrategy if this MSCI announcement goes through and the Nasdaq and the S&P follows. $9 billion of forced sales on a stock with a $50 billion market cap. Firstly, this is not accurate. Secondly, it's not an accident. Not when the timing is perfect. Not when the target list is political. Not when Trump's own Bitcoin company is on the same list. This is a weapon. And if you think it ends there, let me show you the next part of it. Let me show you the banking side of the strike. Because MSCI isn't acting alone. Remember during the Biden era, when Trump and his media company were debanked? Well, at the time, JPMorgan not only debanked them, but they refused to accept a more than $1 billion deposit from Trump Media. And what else they do? They handed over any and all of the company's banking records to the Biden DOJ. This even included records from before the company existed. That same period is exactly when JPMorgan shut down Trump's media accounts right after the company completed its merger. Right when the company was preparing to go public. Exactly at the moment when it would hurt them most. And despite all that and all the accounts closures, well, Trump Media still went public under the ticker DJT. But the attack wasn't about stopping the launch. The attack was about weakening them when they were about to go public. And now it's come to light that JPMorgan didn't just happen to sabotage Trump Media. They're now accused of coordinating it with the Biden DOJ. The Florida Attorney General says that JPMorgan gave Trump's media's financial information to the Biden Justice Department. And this happened exactly when the company was preparing to go public. The claim is pretty simple. JPMorgan's actions lined up exactly with a federal investigation targeting Trump's companies. And so that's why the state is looking into whether the bank helped create financial pressure on Trump Media to try cripple it during its merger. They did this by shutting down capital access, damaging the company's reputation exactly at the time when they were supposed to go public. This is what you call political warfare executed through a bank. And it's not random. It follows the same pattern that the government used before during Operation Choke Point. They pressured banks to shut down the accounts of businesses that they didn't like. And it's all documented in congressional reports. Regulators labeled high-risk industries, and the banks were quietly told to cut them off. No charges, no due process, no judges, just financial pressure.
Who has determined fraud? You're an attorney at the DOJ. Has there been due process? Has there been a hearing? Has there been an adjudication of fraud? We have a bureaucrat in the DOJ that says, I think it's fraud. And so, you know what? I'm going to shut down a legitimate business.
Now, that same model has quietly returned to crypto. Just look at what JPMorgan is doing today. They just shut down Jack Mallers' account. He's the CEO of Strike. And when you ask for an explanation, every time you asked why, they said, we aren't allowed to tell you. You're not allowed to tell the guy why you're shutting down his account. This has even happened after Trump signed an executive order banning crypto debanking. So listen, this is not a coincidence. It's the same choke point architecture, the same architecture that took aim at Trump's businesses, now coming back to crypto. And anyone tied to this new financial system is in trouble. So wait, what is this new financial system? Well, that's where we get to the political layer of the story. Because this isn't just about the banks. Democrats have openly declared war on crypto. Whether it came from Brad Sherman, or Elizabeth Warren, or Gary Gensler, or anyone else on the left, these were never regulators acting in good faith. These are funded political actors acting on an agenda. And they have already made up their minds.
But look at what's happened in the price of these things. The idea that somehow they're a protection or a hedge, I don't think that's going to be borne out over time.
And to make it worse for them, Trump's election victory came largely from his pro-crypto stance. And the deeper he got, the more invested Trump became. And now that Trump's so invested in crypto, they found the perfect weapons to aim at Trump's crypto ecosystem. First, you have Elizabeth Warren and Jack Reed demanding investigations into 𝗲𝗏𝗽𝗲𝗽, which is Trump's crypto project. Why? Because the project raised $550 million, and they found $10,000 in the raise that they didn't like. They say that the company may now have strong ties to suspicious money from North Korea and Russia. Now, just to put it into perspective, that's $10,000 out of $550 million. That's less than 0.00018%. And this is why they're asking for an investigation. It's clear that what they're doing is they're trying to attack Trump's crypto ecosystem. And look at the voting records. The Genius Act, the Clarity Act, the Anti-CBDC Act. 210 out of 212 Democrats voted no. And the other two didn't even vote. There's no interest in clarity, no interest in innovation, only obstruction and political warfare. These guys aren't about financial regulation or innovation. They also know that Trump is leveraged crypto at the moment more than any political figure in history. His own crypto company, DJT, they own over $1.3 billion in Bitcoin. He owns mining companies. He owns crypto infrastructure companies. So he's financially tied to Bitcoin and crypto success. The Democrats know that when they attack 𝗲𝗏𝗽𝗲𝗽, when they attack MicroStrategy, when they weaponize the MSCI, they're not just attacking crypto. They're attacking Trump's balance sheet. Now, here's where it gets even darker. And all of this makes a lot more sense when you look at who's protecting the old financial system. Jamie Dimon, the most powerful banker in America. For years, he's acted less like a CEO and more like a political gatekeeper.
Currencies that do something versus Bitcoin that does nothing. 𝗕𝗏𝗽𝗧 going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased. The government's probably going to have to close it down.
And what's his agenda? Well, Politico reports that he's one of the strongest defenders of the Federal Reserve's independence, because the Fed structure keeps the banks at the center of the system. Dimon isn't a neutral banker. Dimon is acting like a protector of the old financial system. The same system that Trump's taking power away from. And this is what I call the old system. This forms the crux of the story. Let's zoom out now. Let me show you what the real battle is about. Because it's not about a coin, and it's not about the indices or the stock tickers. It's about a battle between two financial architectures. The old system and the new system. The old system is controlled by the Democrats and the banks. JPMorgan, the Federal Reserve, MSCI, anti-crypto lawmakers, and even the Department of Justice. And here's how their model works. Control the money through the Fed. And remember, the Fed is partially privately owned and partially publicly owned, and it operates with enormous independence from voters and any elected officials. The Fed effectively controls the banks, and the banks control the credit. The credit controls the markets. The more credit, the higher the markets go. And the higher the markets, the higher the indices. And did I mention earlier who controls the indices? Well, that's MSCI. That's how the old system works. The new system, Trump's system, works differently. Trump's goal is simple. He wants to reduce the Federal Reserve's independence, and he wants to shift the monetary authority back to the US Treasury, where Bessent is now. This would be putting interest rate decisions and monetary policy decisions under tighter political control instead of an independent and private company. And this is the part that terrifies the Democrats the most. Trump isn't only fighting a crypto policy. He's fighting to move the money center of American gravity away from the Federal Reserve, away from the banks, and towards the Treasury, where he can directly reform the control. If he succeeds, the Fed loses its monopoly. The banks lose their chokehold on credit. And the banks know this, right? The Democrats also know this. And who are the biggest funders to the Democrats? Well, the banks. And so that's why they're attacking now, before Trump gains control of the Fed in 2026. Because remember that in May 2026, Powell leaves the Fed and Trump is free to appoint his own chair. People close to the administration are calling this the defining battle, the once-in-a-generation opportunity to shift monetary power away from the Fed and the banks back to the American people. And for now, this is a race against time. Which brings me to my next point. Why MicroStrategy must be destroyed right now. Because MicroStrategy is not a tech company in their eyes. It's a bridge. It's the biggest Bitcoin treasury company, and it owns nearly 4% of the total Bitcoin supply. It's the gateway that converts equity into Bitcoin, debt into Bitcoin, and preferred stock into Bitcoin. And it does this at scale and completely legally. If MicroStrategy continues, 50 other companies could copy Saylor, and corporate Bitcoin standards will become the norm. The Treasury could build a national Bitcoin reserve. Trump could then bypass the entire banking system. So to kill Trump's plan, you've got to kill MicroStrategy first. And the MSCI rule does exactly that. JPMorgan's hikes on margin also do exactly that. Political investigations also do exactly that. This is not random. This is not a coincidence. This is a strategy. So what happens next? Well, there are only two outcomes here. If the old system wins, MSCI passes the rule on the 15th of January, and then we get a between $2 and $9 billion forced selling of MSTR. This way, the crypto treasury model dies. Bitcoin loses billions of dollars in inflows, and Trump loses a part of his crypto infrastructure. If Trump wins, or if sanity prevails, MSCI backs down, MicroStrategy stays index eligible, and the corporate movement explodes. Stablecoin rails shift power away from the Fed to the Treasury, and the Fed loses control. That way, Bitcoin becomes a strategic US collateral. The takeaway is simple. This wasn't a random sell-off. This was a coordinated move with a target and a timeline. Between now and the 15th of January, every piece of news that we have from the MSCI JPMorgan, and even Washington really matters. The market will massively react to any information on the topic. So the smart play is not to speculate. It's to monitor the situation, to track the policy shifts, to keep this plan in mind, and to stay objective. Avoid any high risk and leverage trades because we're going to get a lot of volatility. And when that decision comes, be ready to press the trigger. I'll keep updating you between now and the 15th of January, and we'll press the trigger together either way. Let me know what you think of my analysis. And I don't usually do these kind of stories, but when all the puzzle pieces came together, I just realized that something much bigger is going on here. I'll see you again in the next one. And if you haven't yet subscribed to the channel and you want more of these videos, please smash the like button, subscribe to this video, and I'll see you again soon. Until then, trade well, my friends.